Morning guys. So the inflation numbers came out and hotter than expected, 6.4. Market was expecting 6.2. So a lot of volatility around that, and I'll show that and explain that in a minute. But we've got retail sales coming out, which could also give more volatility to the narrative of the Fed pivot. And speaking of the Fed pivot, I think that story is now dead, as the market is starting to price in more rate rises this year and no chance of a rate cut this year. So interest rates are going to stay higher for longer, particularly after that, after the news yesterday. So looking at stocks, a bit of volatility when we go and look intraday. There was high volatility as we got the, this is a 5-minute chart here. We got the CPI print before the cash open, and the market weakened off that. Then the cash market opened, tried to rally but failed, tried to rally and then just went sideways. So quite a bit of volatility there around that. There's a lot of talking heads There's a lot of talking heads out of the Fed as well, all reiterating the story that interest rates are going to be higher for longer. So when we look at the daily, we finished pretty much unchanged in the middle of the day. Doesn't give us a clear indication of which direction the market's going to go. Fundamentally, you would think this direction, but the stock market never really behaves as it should. The stock market could easily go that direction, but with no clear direction right now. Fundamentally, you'd have to say this way, with interest rates going higher and a more likelihood of a recession. The jobs are still hot, inflation's still hot, so interest rates are going to go up, and that's not good for stocks. But looking at price action here, we're in an uptrend, and the momentum is that direction, is in an upwards direction. So a bit of a mixed bag there. What I did note was, interestingly, that despite the CPI print, VIX continues to weaken, i.e. No one's really starting to hedge against a fall in the stock market. If they were, then VIX would be rising. So VIX and people in the stock markets aren't really convinced that a sell-off is coming yet. I guess time will tell. Bitcoin had a good session on the back of the news. 10-year bonds also rose, as you would expect, along with the shorter end also rose as well. Now that the terminal rate is somewhere around 5.5% from the current 4.75%, so another 75 basis points starting to be priced in to the US market. What else are we looking at? Let's go and have a look at commodities. Still a bit of a mixed bag. Copper trying to come up on the back of Chinese growth and improved outlook for Europe, and that's something to keep an eye on, particularly for the Aussie dollar. But I think the biggest story is the US interest rate market, with not only inflation last night, but retail sales coming up and the PPI later in the week as well. So looking at US dollar index, it is right up. I'm going to go over here. US dollar index. As we can see, it's on this resistance. If we look at the 4-hour, we can see it better here, and it's struggling to get through that. But now we've got the momentum that it should be able to do that. I don't like buying at resistance. I prefer to see it come through that, then retest, and as it's bouncing off the resistance, off the support, because what was resistance will now become support. And when it bounces off that, maybe this is over the PPI later in the week, it might be next week, but once it bounces off that, that's when the opportunity to get long is. So if you're looking at euro dollar as an example, it'd be getting through this resistance or this support level and then fading it off that resistance. So that's about it for today. I hope you all survived the volatility in the price. As you can see, it was pretty hectic, and yeah, we'll be back again next time. Take care.